Hello, this is Brian Shannon from AlphaTrends.net. Today is Wednesday, the 23rd of April, 2008. The market has closed. S&P 500 finished today with a loss of 20 cents, or about 0.15%. You can see that the market continues to consolidate underneath the important level of resistance at 140, and it's looking a lot like a bullish-looking flag in here, really. If you look at this recent activity after this big run-up, if that's the case, then it would suggest a continued upside equal to the height of the flagpole here, which we could just roughly measure at about 139 to down to 133, so 6 points from the breakout point, which just eyeballing it here, let's call it 136 and a half, would give us obviously a real nice upward target of about what did I say the breakout point was? So 6 points, 142 and a half or so, 144 and a half rather, which would put this 200-day moving average into an area of possibly being tested, as well as the lows from December. When we look at the weekly time frame, we still have a bearish-looking picture here, though, and that's why I don't really fully trust it. But going just based on this daily time frame, we are looking pretty bullish here. We've got a rising 10, 20, and 50-day moving average, and the market has tested and held above that important 137 level of support. If that breaks for some reason over the next couple of days, then I think we have to be more concerned about a larger failure, as a lot of times these tests, when they keep coming up to that level and then fail to break out, a lot of times it traps a lot of long participants who then run to the sidelines and get rid of their stocks in a hurry. But for now, 137 will remain the more important level of support for this market. Maybe, like I said yesterday, down to a 136.80 or so. But basically, that's the most important level for this market right now. On the 10-minute time frame, you can see that we've got this pattern. Really, it's looking more just like, again, that flag really is the way we can realistically look at it. And if I delete that and kind of draw it more like this, you can see there's more symmetry to it in here with these moves. So I think breaking past this level here at about 138.70 or so, let's just call it 139. That way it'll get us back above this level. Above 139, then we can look for a resumption of this uptrend. If it does rally from there, there is the potential that 140 will hold the market back. But if it can get above that 140 level in particular and hold above there, then I think we're probably heading up towards the test of this 200-day moving average and the last December's lows. So we're still, we continue to show bullish progress in this market. The Russell 2000, again, this is the relative underperformer here recently. The most important level, obviously, for this market continues to be that 73 area. This market looks like it's just more range-bound than anything. But we are seeing improvement with the 10 above the 20 and the 20 above the 50. They're all advancing. And this has been a pretty orderly pullback. But when we look at the 30-minute time frame, we've got this area right here at about 71 and a quarter that I think the market's going to have to get above that and hold above it. Yesterday it said 70 and a half. But that really just kind of puts us more into this range. It's back above 71 and a quarter. Then I think we get another test of this high here. And then the market will likely test that 73 level. Maybe then we get a run up to the 200-day moving average. And it doesn't necessarily mean the worst is behind for us, but it would definitely be worth a trade worth considering and participating in, obviously, if we could get that much strength. So continue to just focus on that 71 and a quarter level. That's these lows from the 21st, and I think getting back above and holding above that level would be a good positive for this market. Again, it would also break this downtrend line, of course, at about $72 a share. That's what we looked at yesterday, and getting above that 71 and a quarter would be looking good. I think that back below 69 and a half, though, then you want to get a lot more defensive once again, because that would put everyone basically from the 15th or so back in a losing position, and that would do some pretty good damage to the psychology of the market, I think. The financials held up pretty good today, I think, when you consider that AMBAC got nearly cut in half here today, as it dropped from $6 a share down close to almost $3 during the day. So the financials held up in spite of that, but they were still down about 1%. and just still kind of more range bound than anything. 2440 is the important level of support for this market. As far as seeing the possibility for some upside, again, 2620 is a very important level. That's right here. But then it would have to get above 27 in this level here at about 2740 for us to think that maybe we have the chance to get a short squeeze rally in here. And again, that trend line obviously continues to hold this market hostage on the downside. The NASDAQ 100 was up a 1% today with its 51-cent gain. That 46 level continues to hold up well as the highs from last week, or about a week and a half ago, I guess. So this market continues to be very encouraging. We have Apple earnings after the bell today. Let's see if they've reported yet. Apple closed at 162.89. Looking at a tick chart, looks like no data returned yet. Let me see how many. I've got that set up for 2 days. Let's make that one. So it looks like actually Apple is ticking up a little bit here. It closed at 162.89 to 163.39. I would tend to think the earnings haven't been released yet. I haven't checked any headlines, but if we look at this and just look at some Fibonacci based on the highs back in the all-time highs back in December to the recent lows, the market's come up 2/3 of that way. I think a move back down towards maybe the 200-day moving average at 153 wouldn't be a damaging thing for this market. But getting decisively above 170, then perhaps this stock is going to be considered recovered and continue to move higher. We'll see. But I have no position in it, and I don't like to gamble in front of the earnings like that on the big stocks. NASDAQ 100, though, again, this was the strong group today. If we look at the daily time frames, very bullish action in here. These, the November and December lows at about that 49.5 or 49 level rather continue to be a potential target, as does this trend line in the 200-day moving average. So I think basically around 48 looks like this market, if it can continue to move higher, that's where it ought to go up to, maybe even up towards this 48.75 or so. But the NASDAQ is clearly the most bullish in here. 1% gain today, while the S&P 500 was down to 0.2%. Short term, we've got just a little bit of resistance recently here at 47.25, and it looks like maybe you could make a case that we've got a inverted head and shoulders pattern setting up. Now, most people look at it inverted head and shoulders patterns as a reversal pattern, which you want to see down, somewhere down here would be the more typical place to find an inverted head and shoulders pattern, but they can also act as continuation patterns as well. So getting above this 47 and a dime, let's call it, then maybe we've got the potential for another dollar higher based on this measured move, and that would put us back up towards that 200-day moving average. So the only thing that I think would damage it is getting back below 46.5. Then I would once again be more defensive on this NASDAQ 100.